This is Shellis and Associates, Inc. with a 2021 tax update on the Employee Retention Credit. I'm Pam Shellis, an enrolled agent with Shellis and Associates. When the Employee Retention Credit was enacted, the original understanding was that eligible wages did not include employees related to the owners, so relatives of owners were excluded in our calculations, but owner-employees' wages were included in the calculation of eligible wages for the credit. But then on 8/4/21, IRS released their interpretation. This was complex guidance on whether or not a majority owner is eligible for the ERC on his or her wages. This notice, 2021-49, was 34 pages long and rehashed the provisions for the ERC in the CARES Act of 2020, the Relief Act of 2021, and Amplified Notices 2021-20 and 23. It was very lengthy, and it referred to several code sections, including sections 51, 152, and 267. So there was a lot of reading and understanding that went into determining what could be done for the majority or less than majority shareholders. So it finally comes down to what's in the code and referred to as the rules of attribution. The only way the wages of majority shareholder employee qualify is if they have no living relatives. Under Code Section 267C, stock is indirectly owned by spouse, siblings, ancestors, lineal descendants, aunts, uncles, and in-laws. If the credit taken includes non-qualified wages, you may amend the return on Form 941X and repay the credit received. If you do not correct the position taken on the original return, you may be subject to penalties, including a 20% accuracy-related penalty if IRS examines your payroll tax returns and disallows that portion of the ERC. So bottom line, it doesn't matter what percentage of ownership a shareholder employee has, their wages do not qualify for the Employee Retention Credit. We do not believe this was the intent of Congress when writing the law. We have been watching the current tax legislation in Congress, hoping a correction will be made. This would not be unprecedented since Congress recently corrected a law regarding the deductibility of expenses paid with PPP loan money, which was forgivable. We know there are tens of thousands of S corporations affected by this IRS interpretation. They were able to keep their businesses viable during the pandemic. Many now are not able to repay this credit. So business owners have three options regarding the Employee Retention Credit. The first is to amend the returns and repay the credit on disqualified wages. The second is to wait until there's more clarity and hopefully corrections being made by Congress. The third is not to amend the returns at this time, but you still could face a potential audit. It's important to remember that it's each business owner's decision. The ERC reduced wages on the 2020 Form 1120S and affected the pass-through data on Form K1. If you repay the credit, the business and personal income tax returns will have to be amended to correct the wage deduction, so the business profit and the personal tax liability would decrease. If any ERC was taken in 2021, a second decision needs to be considered for this year because the law requires the wages be reduced by the credit, so your business return for 2021 is also affected. When Congress finally passes the current tax bills being considered and it is signed by the President, we will post a summary on our website and Facebook. If you would like more information about your individual situation in the ERC, give us a call or contact us through our website, shellisandassociates.com. Thanks for listening.